Hello everyone, welcome to Santosh sir classes, and there we are back again after a long time, and I'll be giving you all the important questions and answers for this December TE exam 2024, and we will start our journey with MBA study materials and suggestions first, and this is the first which I am going to share in this particular video. This is on working capital management and the code is MMPF-001, and this is in fact a very important material for MBA pursuing students from IGNOU. So the first unit is conceptual framework, and from here the student should revise like what is the meaning of this working capital, and what are the important objectives of working capital, and the main constituents of working capital. Basically, all current assets and current liabilities are included in working capital, which you must specify in your answer. So these are all current assets and these are all current liabilities which you must, revise for the exam. Okay. The next topic is the different types of working capital. Basically, two types are there. One is permanent, the other is variable. And you must understand the meaning of this permanent and variable, because permanent is basically fixed in nature and variable is flexible working capital. So as and when the business requires money, so they are arranged by this variable working capital. The next topic is you know c- cyclical flow and characteristic of working capital. Now when we talk about cyclic flow of working capital, how the working capital moves, so these are the three steps that you should revise. Like, in the first cycle it moves from manufacturing to the finished goods up to the customer. Then the trading firm, how they move the cycle of working capital, and financing firms. So basically you need to explain the three types of concerns or firms which use the different types of working capital. Now, when we talk about the characteristic of working capital, basically it has a very short span of life, and there is a swift transformation. I mean, the different components of assets, they generally transferred from one asset to the other. So it is highly dynamic, and it has some, it is needed for some basic activities of the organization. The next topic is tools of planning for working capital. So how these tools work. So basically these three tools the company uses for this. The first one is a short term planning, then medium term and long term. So, in short term, basically we do cash budgeting, and medium term, we determine the appropriate levels of working capital that is required by the firm. Then we have CVP and fund flow analysis for, to determine the working capital requirement. So I have explained all these 3 points here. Okay. The next one is impact of inflation on working capital. How inflation or the rising price level impact the working capital. Basically, it affects the size of the working capital, then how much working capital is available with the company, the different components of working capital like stock, receivables, cash management. So all these things also impact the working capital requirement. Okay, now let's move on to unit 2, operating environment of working capital, and you must revise here monetary and credit policies. And these are the six different types of monetary policies basically in your syllabus. The first is money supply, then bank rate, then CRR and SLR interest rates, then selective credit controls and flow of credits. So you must revise all this properly. Okay. Then we have financial market. What is financial market? And here you have the meaning of the different type, I mean, the meaning of financial market. And that's it from unit 2. These are two important questions. From unit 3, let's see a few important different approaches to determination of working capital. How to determine how much working capital a company needs. So the first one is industry norm approach. Then we have the second approach, economic modeling approach. This is one of the very important type of approach to determine the working capital requirement. And lastly, strategic choice approach. So we must revise all these three approaches. Then we have the factors influencing the determination of working capital. How much working capital is needed? What are the different factors that affect the determination of this? So the first is what is the nature of business? What is the scale of unit? Like how big the firm is? What are the different methods of production that the company uses? How is the technology? What type of technology it uses, and growth prospect of the company. You must revise this question also. The RBI guidelines in financing working capital management. So this is again a very important one. Let's move on to unit 4, management of receivables. As we know, receivables means the money which we are liable to receive from the debtors, and this is the meaning of credit policy. And what are the different objectives of credit policy? Basically, to increase sales, to increase profit, to maintain liquidity, and to meet competition. So these are the basic four objectives of credit policy which are devised by the company. Okay, then we have the different variables of credit policy, like elements or components, you can say. And these are the four important elements. The first one is credit standard, credit period, cash discount, and collection efforts. So these are the important variables or factors that affect the credit policy of a company. So you must, expand all these points. Then we have credit evaluation models, how to evaluate the credit. So different models have been devised by the philosophers. The first one is decision tree model. This one is a very important. It's a part of economics also. And we have multivariate statistical model, and again one more model, that is rating methodologies of credit rating institutions. So these basically three models that we use, and these are all the expanded form of all these models. Okay, the next one is individual credit rating. How we can rate the credit rating of a company. We know about this. Like हम लोग भी कभी कभी हमारी जो क्रेडिट वर्दिनेस होता है, दैट इज बीइंग जो हम लोग चेक करते हैं ऑनलाइन बिफोर टेकिंग एनी लोन और एज सच, तो दैट इज कॉल्ड सिबिल स्कोर. सो ये वही चीज है, सिबिल स्कोर के जैसा ही है. And this is one very popular you know the method of rating credit standards. So on the basis of this scoring, the banks give loans. Let's move on to unit 5, management of cash, how to manage cash. And from here, what is cash management? What are the different objectives of cash management? So all these 6 points you need to expand in your answer. Then what are the different determinants of cash flows? So again, two factors are here. One is internal factor, and these are all the points which needs to be expanded in internal factors. And in external factors, again, there are only two factors here. One is monetary and fiscal factors, and industry related factors. Basically, external factors are out of control. I mean, they are not under the control of a firm. Okay. Then we have methods of cash flow forecasting. These three methods you can mention in your answer, like independent cash flow item, then dependent cash flow item, and growth in cash flow item. So this needs to be expanded. The next important question that you should revise is methods of managing uncertainty in cash flow forecast. So, like as we know, the future is very uncertain and it's very difficult to predict. So, to for some type of prediction, always the company uses some type of methods. So, these are all given here. One is sensitivity analysis, scenario analysis. This is very popular one. Simulation analysis is there. So, this is also regularly used by the companies. Some more methods are there, like holding a stock which is called near cash asset, extra borrowing capacity, and using interest rate derivatives. So these methods the company generally uses. One for short note, electronic fund transfer and anywhere banking. This is again very popular concept among us. So you can revise this question. Let's move on to the next unit, unit 6, management of marketable securities. So why we invest in securities? So this question you should revise for the exam. And the next topic is the different types of marketable securities which are available in the market. Like in debt securities we have again sub classification, like money market instrument are there, call money, CD, certificate of deposit, CP, commercial paper, and bankers. We have already, we have read in colleges and school level about this. I don't think it will be a problem. And while doing the equity investments, we can go for common stock, which is very popular among the people, and we have preferred stock also. One more category is there, that is contingent claim securities. And here also we can invest in options, we can invest in warrants, we can invest in convertible securities, and we can also invest in future contracts. Sorry. Okay, the next question, optimization models, how to optimize this investment. So there are different models are there, like this Mac Adams and Bedman model. This is very popular. You can get it in short note. These are the different models. Baumol model is there. Then we have Beranek model, Miller and Orr model. This is also very popular one. Stone model is there. So I've written all this in a very simple and uh, understandable language, so students can easily understand this. And you can also buy the hard copies of my these books by messaging me on the WhatsApp, which is given in the description box of this video. Okay, unit 7 is management of inventory, how to manage inventory. What is inventory management? This is you should revise. And what are the different objectives of inventory management, and the different types of cost associated with inventory management, like all these material cost, ordering cost, carrying cost, and opportunity cost. So these needs to be explained. And the next very important topic from this chapter, the different inventory management techniques. Like these four techniques are very popular. One is EOQ, that is economic order quantity. Second one, reorder level. Third one, ABC analysis, and just-in-time inventory control. All these four steps, I mean, techniques are very important. So must revise for the exam. Okay. Then we have like inventory management under uncertainty, how to manage inventory when you seen that the environment is quite uncertain. So this is the first one, option pricing model. So the other one is risk adjusted discounted cash flow, which is popularly known as DCF model. And one more, that is dynamic inventory model. So with the help of these models we can manage our inventory well. Unit 9 is on payables management. After receivables management, it's time for payable management. What are payables, why they are important, different types of trade credits which are generally used by the companies, like these three: open account, promissory note, and bills payable. So these three are used basically by the companies. And how to determine the trade credit? So there are various factors. One is depends on the size of the firm, how big is the firm, then what is the category, I mean industrial category, whether it is manufacturing or a service providing like that, the nature of product, financial position of the seller. So these factors affect the trade payables. Fifth one is financial position of the buyer. Then what are the terms of the sale, cash discount available, what are the degree of risk, then the nature and extent of competition in the market. So all these things affect the payable management. Okay. Now, what are the different advantages or benefits of payables? So this also you can revise, and how effectively we can manage the payables. So this question also needs your uh, attention. Okay, let's move on to Unit 10, Bank Credit Principles and Practices. Now, principles of bank lending. So basically, these three principles are followed. One is principle of safety, principle of liquidity, and principle of profitability. So these three principles are basically used by the banks before giving credit. Then the next topic is style of credit, and from here you should revise this one. Overdrafts, we know about this. Then CC system, this is also very popular among business people, and the merits and demerits of all these systems, so they are also quite important. Then we have loan system. This is also very common and popular method, and its advantages and disadvantages. Again, different types of loans are there, like short term, medium term, and long term loans. So this also you can write in your answer. Then we have bridge loans, composite loans. So different types of loans are there. So you need to understand the concept and write the answer in your own words. So that is the key. Then cluster financing and personal loans. Okay. The next topic is classification of advances according to the security. I mean, on the basis of security. So one is secured advances, the other is unsecured advances. So when the loans are all secured, that means you are providing mortgage, so that is secured. And when we are not providing any mortgage to the bank, it becomes unsecured. One more type of advance is there, that is the guaranteed advance. So this is also popularly used by the banks. The next topic is modes of creating charge over assets. So when we put our assets as a pledge, I mean as mortgage, so how the bank or what are the different claims that the bank can make on our assets. The first one is pledge. Then we can also do hypothecation of that. We can directly mortgage our assets with the bank. These are the different types of mortgages that also you can specify in your answer. One more type of advance, that is assignment. Then we have lien, I mean. So these are the different types of the secured. I mean, we can secure our assets with the bank. Okay. So the next topic is the different types of secured advances. So basically, we can use all these documents of title of goods, stock exchange securities, life insurance policies. We can keep this as mortgage with the bank to avail credit. Fixed deposit receipts, then real estate, that means the property. So all these things can be mortgage. We can also keep our book dates and mortgage. We can also put supply bills, which are receivables. Okay. The next topic is purchase and discounting of bills. So how can we discount our bills? What are the procedure and what are the advantages? So these two topics you must revise. The next one is Consortium advances. So here also, like, these are three types: sole banking, then consortium basis, and syndication basis. So this topic should also be revised. Then comes credit worthiness of the borrower, how a bank can find the credit worthiness before giving loans. So these factors are considered, like character, capacity, and capital. 3C. Okay. Unit 11 is other sources of short-term finance. The company can go for public deposits. Some rules are there in the public deposits, so this must be learned by the students. And then how can we maintain liquid assets with us? Interest rates. So these are all very short type of short notes regarding this. So just one line, two line is like, sufficient. So it can come in your long answer. So this registration process, then repayment of the deposits, then what are the different penalties that can be charged with the by the bank. Then comes commercial paper. This is also money market instrument, and what are the eligibility of, like, issuing this commercial paper, the different terms of commercial paper. So a lot of things to remember, in fact, and the different procedures of issuing commercial paper by the company to raise finance. Then we have bonds and debentures. These are debts or loans taken by the company. And here also, like, what are the different eligibility criteria and how the firm can take loans on this. Then factoring of receivables. So this is again a short-term source of finance for the company. Its mechanism, how it works, factoring. Okay. The next unit is Unit 12, Working Capital Management in SMEs, small and medium scale enterprises. So these are very popular in India, in fact, small scale industries. And how, like, the first question you can revise is the different characteristics of SME, and the effective working capital management, how they can manage their capital. Like, this is the first step, like, reduce the inventory so that they will not block their funds. Again, they are subdivided into different processes, so this must be revised. Unit 13 is on working capital management in large companies. So here, the first one is difference in SME and large scale company requirement of working capital. So this can come in the distinction. Then factors affecting large companies' working capital needs, how they are affected. So these factors you can mention here, like managing liquidity, taking care of the receivables. Then we have inventory control, managing short-term debts. So sorry. So these things you can mention and prepare for the exam. Unit 14 is on working capital management in MNCs, that is multinational companies, and special issues and concern. First, you can revise this question, like issues in international cash management, important topic. So friends, that's all in this video. These are few important questions that you should revise for this MMPF-001 for this December exams. Thank you very much for watching this, and keep my channel subscribed so that you get all important videos regarding MCOM MBA. Okay, thank you.